The market right now, it feels like it has two completely different minds. On one hand, you've got absolute rockets, and on the other, you have rocks. Today, we're going to break down exactly what is going on.
Plus 541%. No, that is not a typo. That's the actual one-year return for Palantir, a company right at the heart of this whole AI explosion. And when you see numbers like that, you can't help but think the entire market is a rocket ship.
But this is where the story gets really weird. If the market is such a rocket ship, then why are absolute giants, I'm talking Home Depot, a company in millions of our homes, why are they hitting rock bottom? This is the paradox that's tripping everybody up. And stick with me, because there's one key concept that explains all of this, and we're going to reveal it at the very end.
So what's at the heart of this problem? Well, it's that the market is flashing completely contradictory signals. It's become a classic tug-of-war, and, well, investors like us are stuck right in the middle of it. Here's the tension, right? On one shoulder, you've got all these alarming geopolitical headlines and inflation fears whispering, hey, be careful. But then, on the other shoulder, corporate earnings have been way stronger than expected, and you've got the big banks yelling, buy the dip. So who are you supposed to listen to?
This conflict really forces you down one of two very different roads. Now, each one is a classic, time-tested strategy, but right now, they feel like they are from two completely different planets.
So, in one corner, you have value investing. This is that classic buy the dip way of thinking. Think Warren Buffett. You're hunting for fantastic companies that are just temporarily out of favor. And then, in the other corner, you have momentum investing. This is all about chasing the winners. The whole idea is that the stocks that are already trending up are just going to keep on trending up. These are two totally opposite mindsets. So let's dig into that value side of the argument first. What does it actually look like to buy the dip today? Well, here are 5 household names that are basically sitting on the clearance rack. Now, what's so interesting here is that we're not talking about small, risky companies. These are absolute giants. You've got Home Depot, a dividend machine that just hit a 52-week low. Abbott Labs has paid a dividend for 409 straight quarters. And even Salesforce, despite taking a hit recently, just posted record results. The whole value argument is that these are amazing businesses just facing some temporary headwinds. Okay, now let's do a complete 180 and look at the other side of this market, the momentum leaders. These are the stocks that have just been on an absolute tear. And this list, it really shows you that other universe. Of course, you've got Palantir, just fueled by the AI revolution. You've got GE Vernova and Vistra riding this massive, almost invisible wave of demand for electricity. And then you have proof that the consumer is not dead. Tapestry and Royal Caribbean are soaring because people are still out there spending. The momentum argument is simple. Why bet against a rocket that's already in flight? So you've got these two very clear but totally conflicting strategies. But here's the catch, okay? There are some major storm clouds on the horizon that could honestly sink both of these boats. You have to watch out for 3 major landmines here. First, if oil prices spike, that could reignite inflation all over again. Second, a single headline out of nowhere can flip market sentiment overnight. But it's this third one that's the most dangerous, especially for you bargain hunters. A stock that looks cheap might just be broken. A 52-week low isn't always a price tag. Sometimes it's a warning label. Okay, so we've seen the rockets and we've seen the rocks. I promised you that there was one concept that explains all of this. Well, here it is. Capital rotation. It's kind of like an invisible force that's driving everything we've been talking about. It's simply the movement of money from one part of the market to another. And this is where it all clicks. The real game isn't about choosing team value or team momentum. It's about understanding why the money is moving. Just think about it. The AI boom creates this insatiable, ravenous need for electricity. So capital rotates into power stocks like GE Vernova. But that money has to come from somewhere, right? It flows out of other sectors, which pushes down really solid companies like Salesforce, and that creates the very dips that the value investors are looking for. You see, it's not chaos, it's a chain reaction. So that brings us to our question of the day. After seeing both sides of the market's split personality, which approach makes more sense to you right now? Are you out there hunting for bargains with the value strategy, or are you looking to ride the wave with these momentum leaders? Drop your answer in the comments below. I'm really curious to see how you're all thinking about this.